Welcome to the Stockscores Market Minutes for June 11th, 2012. This week's topic, the random walk. Are we in a random walk type of market? Quick reminder, you can get my newsletter for free, stockscores.com/newsletters.asp, the address there on your screen. All right, so what is the random walk? Well, generally markets are efficient. That means that the movement in price will be efficient random, because we really can't predict what the new information will be. In order to beat the market, in order to overcome the randomness of the market, we have to look for market inefficiencies and exploit those. Now, those can come in two forms. One, in new information that is coming into the market that is not yet fully known by the general public, and two, by looking for situations where there is emotion in the market which causes a mispricing in stocks. The problem in this market is that it is very, very good at pricing in information quickly. There is no speculation because the market is largely being traded by institutions and large investors, and you don't have that retail investor in the market who is speculating on stocks. And that's why this market has been a little bit difficult to trade. Now, of course, that'll change eventually. The retail investor will come back to stocks, but for now, that's one of the problems that we have with this market, is that it's been pretty random. We do, however, have emotion, and this week we're seeing the emotion picking up as investors worry about what might happen in Europe with the Greek election. And so we can consider trading the VXX to take advantage of that emotion. I'll talk more about that in a moment. If you want to find stocks that are trading on new information that are being inefficiently priced, at least in the short term, look for abnormal price and volume action. I talk about that a lot in this video series, and that's really quite important. All right, let's take a look at the S&P 500 chart to begin. Last week I said I am bearish on stocks, but I expect that we will see a short-term bounce back, and that's exactly what we had. Bounced up to the top of the downward sloping channel, where today we have found resistance again. The market was strong on the open and then fell throughout the day and down for the day, down fairly sharply actually, and I think we're going to continue to see lower prices as we trend downward in this channel. Now that changes when we break out of the channel, but of course we haven't done that yet, so we have to remain bearish until that happens. Same can be said for the TSX. It rallied up to the top of the channel, got stuck. It actually got stuck last week on Thursday. Tried again today to test it and just couldn't break through the top of that channel. So it looks like we're more likely to head lower than higher, and until we get a break of that downward trend line, we should remain pessimistic about Canadian stocks. Well, we talked about the VIX, and of course the VIX is often referred to as the fear index, and it tends to move when there is uncertainty in the market. We've seen the volatility in the VIX increase lately. We had quite a strong reversal today where we opened weak on the VIX and then rallied through the day to end at the high of the day. Those are signs that the market is worried about something, and with the Greek election coming up on June 17th, it is no wonder that the VIX is rallying. So I think this will be a fun place to trade. While stocks in general are probably going to be tough to trade this week, the VIX should be a pretty good place to trade for this week. The 20-year bond, Treasury bond in the U.S. Really became overbought. You can see that by the way it ran away from the upward trend line. And I talked about that last week. It pulled back to the trend line and is now bouncing off of it. So the trend here remains up, and given uncertainty in the world, I would say that it holds that upward trend line. We can get a little bit more optimistic about stocks if that green line is broken, because that means money is coming out of relatively low-risk assets like treasuries and back into the stock market. U.S. dollar had quite a rally and is now in a flag pattern. A lot of volatility in the U.S. dollar. That shows that uncertainty about what is happening in Greece and Spain and how Europe is dealing with those problems. The chart here remains optimistic because we have rising bottoms. It's in a little bit of a taking a break mode right now, but that's normal. If we get a break of the flag through the upside, that'll probably correspond to a jump up in the VIX and a downward move in stocks and probably most commodities, perhaps not gold. So you want to keep an eye on this chart as well. It's a very important indicator of what's going on in global events. The gold chart, I've been bearish on gold for some time, and we've had a little bit of a rally lately. That rally seems to be fizzling out, and I still think that this chart is headed lower in the months to come, although in the very short-term days to come, maybe even the next couple of weeks, it could sort of bounce around in this price range and not necessarily reward a short seller. I think if you're short gold right now, you have to have a long-term view on that trade. The oil chart is pretty oversold. You can see how it's got a more steep downward trend line that is built over the last 4 or 5 weeks. That is a sign that there's some pretty good emotional selling in oil, but there is really no sign of a bottom here yet. Until we start to see some upticks, some rising bottoms, I would be bearish on oil, which of course is an indication of what the global economy is looking like. So I'm bearish on everything: U.S. stocks, Canadian stocks, gold, oil. Unlike last week where I thought there was going to be a bounce, I actually think this week we're more likely to go lower than higher, and that is good if you're a short seller, good if you are trading put options, that sort of thing. But I think generally most investors should be in cash out of the market. I've been saying that for a while. Although you can trade the odd stock that is trading abnormally, of course we're looking for alpha in that case. Stocks trading abnormal volume, abnormal price. I think that a good place to trade this week will be the VIX, because there is going to be lots of headline movement as any little bit of news comes out of Greece about what's going to happen with the elections, as any information comes out about the state of Spain and how well they're dealing with their debt problems. All of those things are going to cause lots of volatility in the VIX, and of course if you're a trader, volatility is a good thing. Well, that has been the Stockscores Market Minutes for June 11th, 2012. Once again, to get my free weekly newsletter, go to stockscores.com/newsletters.asp. Have a great week in the market and trade well.